I'm Boyd and I'm one of the directors at Integra Financial. So this training video, we'd like to concentrate on the process and what to expect. Especially if you're new to mortgages, it's a daunting task sort of taking a mortgage on. So I want to give you a general understanding in terms of what happens when it happens so you know what to expect. And hopefully this will save you some stress during your process when buying or remortgaging. Let me start off with the purchase process. Although it's very much similar to that of remortgaging, there's a kind of few key things to point out. So, number one, before making an offer on a property, ensure that you've either consulted a bank or building society advisor or an independent broker to discuss the options available and apply for an agreement in principle. An agreement in principle is basically a credit check conducted on yourselves to make sure you're credit worthy for lending purposes with the chosen mortgage provider. Why do this first? Well, quite simply, would you want to go into an estate agency, make an offer, then apply for the mortgage and find it falls flat? Because if that happens, that could be detrimental to any further offers that you put forward, because the agency may lose confidence in your ability to buy. So number one, consult advice and information from a qualified advisor, as well as getting hold of an agreement in principle. Once you've got the agreement in principle, that will hopefully give you more power behind the offer that you put forward on your potential purchase. So, moving on a step, the mortgage has been approved, the offer has been accepted. This is the point that you then apply for your mortgage product. You'd have gone through the recommendation process with your advisor, you'd have agreed on a product, terms and so on and so forth. Now it's a case of collecting all your information together, your proof of earnings, proof of identification, proof of address, proof of deposit, and passing that to the bank or building society advisor or the mortgage broker. So the broker's now got all your information. The second phase in the process would be to apply for the full mortgage application by way of submitting property details, details about your employer's address, direct debit details, solicitor's details, and confirmation of the valuation you wish to have carried out on the property. Once the application's then in with the lender, predominantly now with technology as it is, majority of applications are completed online and electronically. Some lenders still prefer a paper-based model, which may delay the process by, say, 3 or 4 days once they've received it and obviously begin to assess the information. Let's just assume it's an online application. So, agreement in principle is carried out, full application's been submitted, and you've supplied all your information and documents to the provider or the advisor. The lender will then assess the income documents, the proof of deposit, proof of identification, and whatever other things they need to look at as well. And this forms part of their underwriting. Now, either in line with that or after they've assessed that, they will then look at valuing the property that you wish to purchase. When buying a property, it's important that the lender is aware of what security they're taking on and making sure it's adequate enough for lending purposes. So they will instruct a third-party valuer to contact the estate agent or the existing owner or developer to make suitable arrangements to go and view the property. The valuer will then go and assess the property. Once the assessment's been done, the report will be sent back to the lender. Their risk team will assess the opinions, views and thoughts raised by the valuer, and if everything's okay and they've assessed the income side of things at the same time and affordability and they're happy, they will then advance to creating what's called a mortgage offer, which is basically the agreement and terms and conditions of your lending. A copy of that document will be sent to you as a client, to your mortgage broker if you are using a broker or intermediary, and also a third copy will be sent to your solicitor or conveyancer dealing with the legal transaction. The conveyancer will then check through the paperwork, and it's very important at this point that you check through the paperwork as well. It's important to understand that there are no errors or mistakes, or if there's any change you wish to make at that time, that's your option and your point in time where you can do that before you financially commit or sign on the dotted line and agree to those mortgage terms and conditions. Once the solicitor has checked that information, They will then send a copy of that mortgage offer or a mortgage certificate of title or title deed to you to sign and return, and that gives you authority to accept the mortgage offer. So that is the mortgage process in a nutshell. How long are we looking at? So from the point that you physically apply for your mortgage and submit the full application through to getting income assessment, valuation and a mortgage offer, typically speaking you'll be looking along the lines of 2, possibly 4 weeks, depending on the mortgage lender. And that's a good thing to know. Check with your advisor, check with the Bank and Building Society what their speeds of process are like at the moment. Let's say for example you're buying an auction property where you've got strict deadlines to adhere to. The last thing you want to do is apply with a lender where the processing speeds are very, very slow, possibly due to high volumes of business. Keep that in mind. In the background, in terms of fees and charges and the processing elsewhere, it's good to know where you stand and what monies have to be dispersed and when. So I've just run through the mortgage process. So going back to the beginning again, so when we start the mortgage application process, you may be at liberty to pay your arrangement fee, your product fee, your valuation fee, and this is something I've covered off in my previous videos that we've conducted for you, so please go back and have a look at those. As well as that fee, you may have to pay your valuation fee up front as well, if that's applicable to the application. So we could be looking in excess of £500 to £1,000 for those charges. Also at that point, you would have instructed a solicitor or conveyancer to deal with the legal transaction to allow you to buy the property. In today's day, a lot of solicitors may charge between £100 and £350 up front to cover the cost of the local searches. The remaining balance with the stamp duty and the legal fee would then be paid upon completion. Completion is the point where the mortgage funds are released by the mortgage lender and you physically bought the property from the existing owner. At the point the mortgage offer is issued, as I've said, to go move back onto what I've covered off already. Once a mortgage offer is issued and you are happy with the information and you've signed the mortgage certificate of title, the title deed or the mortgage deed, the solicitor or conveyancer will then liaise with the vendor's solicitor to arrange a suitable time and date to exchange contracts, and this is when you become legally liable for the property. In a lot of cases, it's strongly advised that your buildings insurance is in place at this point to protect the build. At point of exchange of contracts, you will then be asked to hand over the sum of money for your deposit, which is typically the difference between the mortgage you'd have applied for and the purchase price. Be aware of that. The solicitors will request the money, you put the money into their account, they will then transact with the vendor and then transfer the money on to them. The next stage from here, which can act simultaneously or have a delayed period, would then be completion. Completion is the point at which the mortgage monies are released to the conveyancer and you physically own the property. Upon completion, that's the point that you would pay the following. The remainder of your legal bill, minus the fee that you would have paid up front to instigate and start the initial searches, plus the stamp duty land tax levy. And bear in mind the costs for stamp duty land tax levy will be dependent on whether the property is for residential, for personal use or for commercial or business use. So please check the government websites or please check with your mortgage or financial advisor. I'm sure they'll be able to give you relevant information on that. So that's the purchase process. The remortgage process isn't much different. So the mortgage process remains the same. However, with regards to valuations, with remortgages, a lot of lenders tend to give you what's called an automated valuation or desktop valuation, which means if the property is visible from the roadside, they may not even want to inspect the property. Or if there's a high level of equity in the property and it's a low risk, typically under 60-65%, the lenders won't send anyone out, they'll use a desktop valuation for that. Anyway, either way, they'll need to value the property in some way, shape or form. So they've assessed the application, mortgage offer is issued. The difference with the process being, with remortgage in conjunction with purchase, the solicitors won't charge you a penny up front. In most remortgage cases, you'll either receive a cashback option where the cashback will cover your legal fee, or the mortgage provider will give you a free legal service. And bear in mind that will only cover basic standard conveyancing cost. Should you require additional work such as transfer of equity to add or take off a party to the title deed and the mortgage, that would come at a cost. You are best to check and seek independent advice on that in relation to costs, charges and procedures with that. So that's pretty much it with remortgage. The other phase that you cut out of remortgage is the exchange of contracts. Why is that? You already own the properties. There's no need to exchange contracts. You own the property. You're already on the title deeds for the property, so that side of things is done. So you go from mortgage offer to completion. Now, one thing to be aware of with completion, if you're remortgaging and there is a penalty to pay on your existing product, ensure that your existing mortgage, unless you need to do otherwise, completes after the day that your existing early repayment penalty period finishes. Otherwise, you could be charged a very handsome sum of money to exit your existing contract early. At the point of completion, if there is a cashback incentive, the lenders will typically give you the cashback to cover your legal fee on the day of the funds being released or within 10 to 14 working days. If you selected the cashback option as part of your remortgage package, you would pay your legal fee at that point. If it's a free legal service, clearly there's no money to pay. Likewise, there would be no stamp duty to pay because that was paid at the point of purchase, so no further funds need to be parted with. Now, the total processing time from the point of applying for your application through to completion will vary a little bit depending on whether it's a purchase or remortgage. Purchase applications are generally prioritised over remortgage because of the strict deadlines and the large chains involved when buying properties. We would hope that most purchase applications across the board would be completed from start to finish within a period of 8 to 12 weeks. Remortgages will heavily depend on when your early repayment penalty deal finishes with your current lender, but usually you're looking at a period of maybe 10 to 14 weeks. I'm not being too optimistic here because I don't want to overpromise anything in terms of general timescales. Another thing to be aware of is the mortgage validity period. Mortgage offers generally are valid for up to 6 months, but please don't be fooled by that because lenders will differ in terms of their procedure and their structure. So it's important that you check the validity period on any mortgage offer, whether it be purchase or remortgage, to ensure that it will still be valid up to the point that you wish to complete on your purchase or complete on your remortgage. In some cases, if the offer does expire before the end of the term, the property may need to be revalued, which may kind of come to an expense of yourself, and you may lose the product and the beneficial rate offered at that point. So keep that in mind. Again, please seek advice from a professional qualified advisor, and always check your illustration. That's it from me. Hopefully we've covered off quite a fair bit and you can take some information away from that and have a greater understanding in terms of the mortgage process. Really hope it's helped. Thank you once again for watching. We're really humbled by the fact that you're continuing to watch our training videos, and I hope to see you again soon.
Oh, teach me, Master, Master, teach me.